Good evening. This is the Elliott wave update for the S&P 500 for Thursday, December 9th, 2021. The fourth wave corrections that we have been following here in the NASDAQ and the S&P continued today. So picking up where I left off yesterday, I had given some heads up that there was a possibility that that fourth wave completed at yesterday's lows at 46.71, almost 72, as the market did put in a fairly steady rally. And then we did see that rally continue in Globex and then began the next decline. So what we now look at is that this is likely wave A, that was wave B, and we're coming down in a C wave. And that may have just completed here in the start of this evening's Globex session. So I'm looking at a low at 46.61. Now, we continue to have Fibonacci support down below, and that's at 46.43. And that would be the 382 level, where wave 4 would have retraced 38% approximately of the third wave. That's most common. Now, originally I thought because of the intensity of the rally and the strength of the rally, that I felt that maybe 0.236, which was 46.69, might just contain it. And so we're drifting below that, not by all that much, to be honest with you. We've gotten down to 61, now we're back at 65. So we're kind of like going to waffle around here, looking for a little bit more direction. And still allowing for the Asian markets and then the European markets to voice their concerns or likes or dislikes for what the US did today. We did see a fairly strong decline this afternoon into the close. And so that was a little bit disconcerting, but at the same time, I think that was just more of in preparation for tomorrow's expiration. And so what we saw, I think, were a lot of hedge funds, a lot of mutual fund portfolio managers kind of coming in and making their adjustments. And I think it's a lot of people getting out of the markets and maybe deciding to put the money somewhere else. In any case, I do think that we're getting very close to the completion point of that fourth wave. And it's not as large as the one that's actually taking place over in the NASDAQ. The NASDAQ has kind of got me a little bit concerned in terms of what may be in development there. But that is on the premise that basically the NASDAQ does overshoot and overdo many of the Elliott moves that we're counting, whereas the S&P stays more in line. So I'm going to give the benefit of the doubt to both that we're finishing up the fourth waves. For tomorrow, I think we still, as I make this recording, need to allow for a continued drop down to 46.43. Right below that, we have the hourly 200 at 46.41-ish. And I would be looking for those levels to hold. If we break there, then we're going to go to 46.22. That's the next Fibonacci support level. The do not break level is pretty far below at 45.71, or I'm going to say 45.72. So break below 45.72 would kind of be, don't break this line. And if you do, then we're going to be left with a three-wave movement up. And that would bring us back around to, as I said in the NASDAQ, and I'll include it here for the S&P as well, that right now we moved the minor third wave over to where I had marked all of the completion points for all of those rallying or advancing sequences, all the way up to a supercycle level, which was a supercycle third wave completion point. That when the market took off from last Friday and just kind of went bananas, then that kind of set the stage for like, well, I had to go back, recount all of this, and then we found that this was easier count as an ABCX, ABCX, ABC. So a triple ABC sequence down for minor wave 4. So I'm still looking at this as that we're in a minor fifth wave. And within that, there are going to be 5 waves of minute degree, 1, 2, 3, this could be 4, and then we have 5, which I would expect to still move to new all-time highs above 47.40. So keeping that all in play, what can take place tomorrow? I've just given our support levels, and I've given the do not break zone, but I'm looking at, if it continues to break down, I would hope that 46.22 is going to contain it. We have additional right down there at the 4,600 level. I definitely don't really want to see it drifting far below that, if at all. I just would not like to see it there, period. Because in terms of the count, I also have to keep in mind, and anybody who studies Elliott needs to keep in mind, that sure, the market can go down there and we'll be able to label it and we'll be able to count it, but it would likely be something else because it ceases to fit. It ceases to look right in terms of third wave. It was perfect. That's what third waves do. They're the strongest, they're the longest, they subdivide, and everything was included in that third wave right there. So it was perfect. Then we get a wave 4, which is just to correct that third wave. So if we get it coming all the way down to 62% of that third wave, well, then it's getting a little bit too deep. It's getting a little bit too big to be corrective of this third wave rally, which was a powerhouse rally. So if it turns into a powerhouse decline, well, then we're likely left with the fact that this goes back over, this gets back labeled a 5. This is an A wave. This would be a B wave, and we're dropping in a C wave. So that which was the preferred count shifted to the alternate. So it's always been there. Both have always now running in conjunction with one another, and we're going to allow the market to make its choice as to which one it is going to be. Right now, it still feels and looks as if it's going to be a continuation of the rally and up to new highs. So for tomorrow, we have our marching orders in terms of where continued decline, so weakness, where we may find support, and hopefully a turning point for the rally to pick up again. Also tomorrow, it is an additional weekly expiration. As we know, there's been a lot of option activity in the tech titans, and that is Apple, AMA, Amazon, Facebook, Google, Microsoft, and Tesla. Tesla seems to cool its jets a little bit, so it's playing a lot better with the market, let's say. Apple was up all day except for that last 15 minutes. The last 15 minutes, it dropped into negative territory. Facebook, up all day long. Last hour, drops into the negative. So I don't suspect they're going to give up that easily. And so I would believe that tomorrow, being the expiration, and either a lot of these options are going to get rolled out to next week, which just continues this style of trading where the whales come in and they buy up at the time an out of the money call and then push the stock to get it in the money. And that then turns around and creates what we're being called a gamma squeeze, simply because as these trades occur and they're out of the money and you're a market maker in that particular stock, you sell those options to whomever's coming in to buy them. And then the hedge is that you hedge your deltas. So your short deltas, then you cover by buying the underlying. If they continue to march the stock to that strike price and then go beyond it, your gamma explodes and you then must continue to cover your deltas, which may go from 50 delta to 100 delta. So you've got 50 deltas per, whatever the size of the trade is to cover. And then you're coming in to buy stock and you're going to be buying it above your strike price more than likely. So it becomes a little bit of a situation for a lot of traders. But as this market ebbs and flows as quickly as it has been through strike prices, it just adds a lot of volatility to our individual indexes. Now, the S&P has given a very heavy weighting to Apple Amazon, Google, Facebook, Microsoft, and Tesla. They brought them in and they gave them a big, strong weighting. So when those move, so will the S&P along with the NASDAQ. Now, being that the other 500 stocks today, which were getting pushed up by the Russell and the Dow and the broader market, that kind of softened the downside a little bit for the S&P until that last hour when everything started to move lower and get hit hard. So for tomorrow, again, trade smart, trade according to what your moving averages are telling you. Right now, they're still pretty lined up. We have the 20 in the, I'll open this up a little bit so we can take a look at it. We have the 20, the 4, the 8, and the 4 all turning lower. We have the 50 that remains pretty flat. It's tucked in right there. And it's still pretty flat, which is not suggesting much that we're going to go down or up. The 200 is down here and also still has a very, very slight upward bias, but it's flat, which is basically giving us why this didn't move these indicators very much. It kind of was flat, even though we sold pretty heavily in that last hour. So I'm going to keep my eye on those. Use them on I use them on my 1 minute, 2 minute, 5 minute, and I look at the 30, I look at the half hour, excuse me, the hourly, and then I check in with the daily. We can do that right now, actually, on the daily, just to kind of finish off today's update to see if any damage was created with today's moves. Nope. Once again, we've got a doji. And so we had one here that led to the weakness. And now we're starting with another, well, it's actually the new day. So that is starting as a doji, but with an upward bias. But this yesterday, or actually today's trades, didn't really even break the 4. So minor weakness, yes, but the rally looks like it probably should continue. They can get this going, get this back above, it's going to look pretty good. And it'll pull a lot back into the market. In fact, the S&P is looking a lot better than the NASDAQ. So have a great trading day tomorrow. Keep an eye on those moving averages, keep an eye on the Fibonacci, keep an eye on the Elliott count, trade well, and the next update will be on Sunday, the 12th.